Are more big box stores getting in the precious metals game? And if so, what does this mean to you? Let's get into it. How you doing, everybody? Welcome to Empire Precious Metals. Thank you so much for watching. If you're new to the channel, make sure you blast that subscribe button, get the bell notification clicked. That way you get updated with any new content. So recently, just a few days ago, at the time of the recording of this video, it's September 30th, so just a few days ago, there was news all across Instagram, some posts here on YouTube about Costco. Costco selling gold bars. Now, this isn't the first time necessarily that Costco or another big box store such as like Walmart has ever sold gold before, like bullion bars. I mean, I've seen it on Walmart a ton of times. Costco, I think they've done it in the past. Not 100% sure, but why this made news this time is because they were offering the Pamp Suisse gold bars in an assay card, 1 ounce gold bars for below spot. And they were allowing 2 per household. And obviously that deal was going to go very, very quickly. I mean, there are ways around how you can do more than the allotment for 2 per household or 1 per household. I mean, there's many different ways that you can get around that. But so this article is talking about the sale of gold and what this can possibly mean to all of you. And also, is gold a better investment than Bitcoin? And this is obviously a debate that's been going on and on for quite a while now, ever since Bitcoin has become essentially mainstream. A lot of people have pointed to Bitcoin as essentially being the new gold and taking away from some of the value of gold, which I disagree with because, again, gold has a lot of intrinsic value and a lot of purposes, and as does Bitcoin. But let's just get into this because that's a whole other discussion for another time. So, gold bars recently sold out at Costco, reflecting investors' soaring mood about the economy. Is there a silver lining for Bitcoin? Now, I don't necessarily think that this is reflecting investors overall. I think that the amount, and I don't have any essentially data to prove this, but this is just my hunch. I think that the amount of gold bars that Costco is offering online was very minimal. And you've got a lot of, gold dealers and stackers and pawn shops and we buy gold places, a lot of jewelers, people that know the value of gold. They just wanted to get a deal. I don't think that it's necessarily really reflecting the souring mood of the economy, although a lot of us do think that the economy is going to hell in a handbasket. So Costco has made headlines this week after it rapidly sold out of gold bars. In times of economic uncertainty and rising inflation, it's no surprise that investors are turning to traditional safe haven assets like gold. The question is whether gold's performance will eventually catapult its price above $2,050, a level last seen in early May. I mean, right now we are seeing gold sitting around $1,840 and change, maybe even a bit less. In fact, why don't we just double check and see? We are seeing gold at, 1848. So gold is sitting at around 1848. Is it going to go to 2050 this year? I mean, it's anybody's guess. My guess is that it's going to continue to drop. In the past 12 months, the price of gold has surged by an impressive 12%. This rally has been partially fueled by the Federal Reserve's efforts to combat inflation by maintaining higher interest rates, a move that benefits scarce assets like gold. While gold's performance is commendable, it's essential to put into perspective. Now, the thing, too, with what's going on with interest rates, I mean, I've heard recently on various news organizations, I do like to listen to a few, believe it or not. I do listen to CNN. I listen to MSNBC. I do also listen to Fox. So I try to listen to all points of view when it comes to listening to news. With the Federal Reserve raising interest rates, one would think then that gold essentially would be going up because of people's fears of what's going on with the increase in interest rates. Now, we know that as the dollar gets stronger, precious metals gets weaker. But again, you have a lot of the sentiment, which is discussed earlier in this article, a lot of people that are very nervous about the economy. We are well overdue for a recession. And a lot of people think that whatever comes next in terms of a recession is going to be worse than what we saw in 2008. But I've heard that on several news organizations that they aren't necessarily done raising rates. Now, while the Fed had, and Jerome Powell has kind of said that they're looking to possibly just pause on the interest rate hikes, it's said that there could be upwards of another 2% of an overall increase before the Fed stops raising rates. Who knows? Over the same period, gold's returns have roughly matched those of the S&P's 500, which saw a gain of 15.4%, and WTI oil, which increased by 12%. However, these gains pale in comparison to Bitcoin's 26,992, staggering 39.5% rise. Still, it's important to note that gold's lower volatility at 12% makes it an attractive choice for investors looking to manage risk. And also, let's not forget that Bitcoin was in the $64,000, $66,000 range just a couple of years back. And so now it's dropped by about half of its value. Risk reward scenarios favor gold. One of gold's strongest selling points is its reliability as a store of value during times of crisis and uncertainty. Gold's status as the world's largest tradable asset, valued at over $12 trillion, positions it as the primary candidate to benefit from capital inflows whenever investors exit traditional markets like stocks and real estate. And we've seen this time and time again. Things get too risky. People get too nervous. They pull out of those risky investments, and then they either park their money in cash or they park it into precious metals. For example, at the height of the COVID-19 pandemic, gold only dipped by 2.2% in the 30 days leading up to March 24th of 2020. And according to data from the World Gold Council, central banks have been net buyers of gold for the second consecutive month, adding 55 tons to their reserves, with notable purchases by China, Poland, and Turkey. This is another thing that a lot of people in the stacking community like to point to. Well, if all of these central banks keep stocking up gold, then that's a signal that I should be stocking gold myself. Bloomberg reported that Russia plans to bolster its gold reserves by an additional $433 million to shield its economy from the volatility of commodity markets, especially in the oil and gas industries, not to mention that they are in the middle of an invasion. So we know that their currency has been down the toilet. Taking a closer look at production figures, Visual Capitalist estimates that approximately 3.1 thousand tons of gold were produced in 2022, with Russia and China accounting for 650 tons of this total. The World Gold Council also predicted that if gold prices continue to rise, total production could reach a record high of 3,300 tons in 2023. One crucial metric to consider when evaluating gold's investment potential is its stock-to-flow ratio, which measures the production of a commodity relative to the total quantity in existence. Also, gold's stock-to-flow has remained stable at around 67 for the past 12 years. In contrast, Bitcoin has experienced 3 scheduled halvings, effectively reducing its issuance, and currently boasts a stock-to-flow ratio of 59. This suggests that Bitcoin has a lower equivalent inflation rate compared to the precious metal. All right, so Bitcoin can outperform gold even with lower inflows. Bitcoin's performance could surpass gold's as the U.S. government approaches a shutdown due to reaching the debt limit, causing investors to seek alternative scarce assets. Bitcoin's $500 billion market cap makes it easier for the price to jump, even if its inflow is much smaller. Additionally, central banks could be compelled to sell their gold holdings to cover expenses, further boosting Bitcoin's appeal. There's also the possibility of new gold discoveries. While gold remains a stalwart in the world of safe haven assets, Bitcoin's impressive gains and lower equivalent inflation rate make it a strong contender for investors seeking alternative stores of value. Despite this, the ongoing economic uncertainty and the Federal Reserve's monetary policies will continue to benefit both assets. So, the takeaway from this article really is it essentially, gold still has its value. Bitcoin still has the people that believe in it as well. And you can essentially go either way with both. Bitcoin obviously being the riskier of the two places to park your money. Personally, I do not own any cryptocurrencies at this time. I have owned crypto in the past, sold it off, made my money, and then I got out of it. Certain things about cryptocurrencies I don't like. I don't like just how volatile it is. And, precious metals is tried and true. So I continue to put my money in the stock market, but I also park it in metals. Anyway, let me know in the comments below. Did you buy gold from Costco, or have you gotten any deals like that from Walmart or what have you? And also, are you investing in cryptocurrencies? Let me know.